Hi folks, CB3 here with another live update. Today is Saturday, September 7th. I am in Los Angeles at a conference and sending you this update from here. Friday was an ugly day in the market, very similar to August 5th, although this day, Friday, was not nearly as bad as that. So we're going to talk about that. We're going to talk about the week ahead, talk about what it looks like so far here in the worst month of the year, September. Stay with us. CB3 Live begins now. So Friday was definitely an ugly day in the market, as I said in the intro, similar to August 5th, although not quite as bad. The S&P 500 dropped 1.7%, which capped off its worst week since 2023. The NASDAQ dropped 2%, making it the worst weekly performance since 2022. The Dow also declined, but really it's the August jobs report that got everybody freaked out. That is basically a stalled job market, only increasing by 161,000, close to expectations, but the unemployment rate unexpectedly rose to 4.2%. And that's what caused the sell-off. And if you add that to Friday, you add that to the month of September, which, as you know from previous podcasts and my CB3 Live episodes, it's the worst month of the year for the market, okay? So nobody knows what the Fed's going to do this week coming up, but they really need to drop the Fed funds rate by 50 basis points, or you're going to see more of this, I'm afraid. So news ahead this week, Wednesday, consumer price index. All right, expected to be down 2.6%. The headline number down from July 2.9. So that's inflation moving in the right direction. And then, of course, Friday's the University of Michigan consumer sentiment issue. But the Federal Reserve is what's in play here. So the Fed's next policy meeting is September 18 and 19. And on the 19th at 1 o'clock Central, that's when they're going to announce a 25 or 50 basis point cut. If there's no cut, it's going to be really ugly. All right, but I don't see that happening. I think we're at least 25 to 50 basis points that day, and then there will be some relief in the market when that happens. So inflation and interest rates are what's in the headlights here for the CPI report. We do have economic growth concerns. That'll be a news item that has to do with continuing earnings reports, although we're near the very tail end of that for second quarter. And then, of course, the third quarter ends on September 30th, and we'll start the third quarter earnings reports in early October. The volatility of September and October is well known, and guys, you just need to continue to expect that. It's this way almost every year in September until we get about halfway into October. Okay, there's nothing here that surprised me. And I do want to say that nothing was stopped out in CG or GI. No stocks were stopped out, all right, in CG or GI on Friday, even in the big downturn. So that's a positive. Corporate earnings outlook, the full year 2024 and 25 are going to be estimated later this week. So we'll be watching for that. So there it is. That's last week, specifically Friday. And then look ahead for this week. We are in the toughest part of the calendar year for market performance. We need to get to that middle part of October. And then I wouldn't say it's smooth sailing, but it's certainly better for market participants as we head into the end of the year. That's all I have for you now. I'm Charles Brown. Stay with us for regular updates. We'll be back with the next CB3 Live Update podcast very soon. We will see you then.